In this video, we're going to talk about the distinction between current EMP and accumulated EMP. So if you remember, under Section 301 of the U.S. Tax Code, when a corporation makes a non-liquidating distribution that qualifies as a dividend, it's first going to be considered a dividend to the extent of any earnings and profits, and that's first going to be applied against current EMP, and thereafter it's going to be applied against accumulated EMP. Then it's going to reduce the shareholder's basis if EMP has already gone to zero, if it's been exhausted, or if it's negative. And then any remaining amount is going to be considered a gain on the sale or exchange of property. And if the stock was held as a capital asset, then that's going to be a capital gain. So I want to talk about some examples to kind of show you how this distinction between current EMP and accumulated EMP can create some situations that you might not have expected. So let's say that you buy stock in a corporation called Crazy Joe's Flying Lessons because you want to learn how to fly an airplane. You purchase that stock for $1,000. So let's say that $1,000 is your basis in the stock. And so Crazy Joe's has current EMP of $6,000 and accumulated EMP of negative $200,000. So when I put something in parentheses, that means it's a negative number. So that means over time it's accumulated losses. But this current year, if we just look at this current year, it's actually made $6,000 in current EMP or profit, however you want to think about that. So now Crazy Joe is going to make a distribution of $10,000 cash to you. And now we need to figure out how much is a dividend, how much is a return of capital, what's going to happen to your basis, and so forth, right? So let's take this 10,000 here. So we'll say that 10,000, we're first going to look to current EMP, right? So we're going to look to current EMP. We have 6,000 of current EMP. So 6,000 of that 10,000 is going to be a dividend. That 6,000 is going to go against current EMP. Now, if you think about it, this might not make a lot of sense because if you were to net together the current EMP and accumulated EMP, you'd have negative $194,000, right? So if you think about it, this corporation has accumulated losses, right? Not profits, if we look at both current and accumulated EMP. So in a way, it kind of seems unfair, right? Because the idea of EMP is that, or a dividend is that you're distributing profits, but you could say, hey, look, I've got a bunch of losses here. But these are the way the rules are. You first look to current EMP, so it doesn't matter the fact that there's a deficit in accumulated EMP. So we have a $6,000 dividend. That brings the current EMP to zero. So that's going to go to zero. Now we still have 4,000 left of that 10,000 that we haven't accounted for. Now we look to accumulated EMP, and that's negative. So obviously, and remember, this is an important point. A distribution, a dividend, cannot make EMP negative or more negative, right? So it's not like this remaining 4,000 is going to come and say negative 204,000. It does not work like that. You're not going to have any more dividends, so it's just going to be 6,000. So what about the remaining 4,000? Well, remember that the next thing we do is it reduces the shareholder's basis. Your basis is 1,000, so now your basis is going to go to zero. Your basis is going to go to zero, and so you're going to get, we'll call that a return of capital, ROC, or just a reduced basis. So the basis is going to go down. So if you were to sell the stock and then you sold the stock for, I don't know, $5,000, that'd be your amount realized minus your adjusted basis. Your basis would be zero, right? So now you're going to have a higher gain than you would have if you had some of that basis available to offset some of that gain. Now, we've noticed that we've got $6,000 dividend, $1,000 return of capital, but we still have $3,000 left of that $10,000 distribution. So what are we going to do? That's going to be considered a gain on the sale or exchange of property. So we're going to have a $3,000, and let's just say that this was a capital asset in your hands, right? The stock that you own, like most people, it's probably a capital asset to you. So you have a $3,000 capital gain. That's how that's going to work. Now, I just want to change the facts slightly and show you how things would play out. So let's pretend now, and there's a different example, same company and everything, but now let's say that we've still got a $10,000 distribution. You still have a $1,000 basis in the stock, but I'm going to change the current EMP and accumulate EMP and show how that affects the way this $10,000 is allocated, okay? So we're going to start with this $10,000. Now we're first going to look to current EMP. Well, current EMP is negative. It's negative 200,000. So we're not going to have any dividend. Remember, the distribution is not going to make EMP negative or more negative, right? It's not going to reduce it. It can only take it to zero. So we got accumulated E&P we look to next, and we got $6,000, so that's going to go to zero, and we're going to have a $6,000 dividend. Now, same as before, we're going to say, okay, well, what happens next? Well, now we looks to the basis, right? So you got $1,000 basis in the stock, so that $1,000 is going to go to zero. So that's going to be, now you have a $1,000 return of capital, or we'll say a reduction in basis, if you want to call it that. And then the remaining $3,000 is again going to be that capital gain. I'm just abbreviating there. So, okay, so we got a capital gain. So that's what happens when we've got negative current E&P and positive accumulated E&P. Now, let's change the facts slightly again. Now we still have a $1,000 distribution, or excuse me, a $10,000 distribution and a $1,000 basis in the stock. So that hasn't changed. What I have changed are the amounts for current E&P and accumulated E&P. So current E&P is $150,000. Accumulated E&P is $200,000, right? So here's how this is going to work. We are going to go, and we got the 10,000. Let's put that 10,000. So 10,000. We're first going to look to current E&P. Current E&P is $150,000, and so what's going to happen is that is going to go to $140,000, and then this entire 10,000 is going to be a dividend. It's going to be a dividend. Now let me just give you an alternative scenario here, right? So we had said that we had this 100, so let me just let's put this 150,000 back. Let's say that the distribution had been $200,000 or something, or some larger amount, and you were trying to say, okay, well, how much comes out of current E&P? What about accumulated E&P? If the distribution was made, let's say 6 months into the year, right? So I'm assuming here this distribution, everything was made at the end of the year, but if it was made where in the middle of the year, let's say on June 30th, right? Let's say you use a calendar year tax year and halfway through the year, then you say, okay, well, how do I apply the distribution toward the current E&P? Well, you'd say, okay, well, 50% of the year is over, so then I multiply the current E&P by 50%, because the E&P for the year is 150,000, but the distribution took place halfway through the year. So you multiply it by 50%, so it'd be like current E&P at that time was deemed to be 75,000 and so forth, right? It's not really an issue in the example I gave here, but just if you see that in your tax textbook or something like that, it's just accounting for if you made the distribution took place at some point during the year, 3 months into the year, then you'd say, okay, I got to multiply that by 25% and so forth. And if there were multiple distributions, then you have to do it on a pro rata basis. And I can make another video on that if people are confused with that, but I just wanted to let you know. So now here's the final situation I'm going to give you is where we have negative current E&P and negative accumulated E&P, right? So one's negative 150,000, the other one's negative 200,000. And again, we have a $10,000 distribution and a $1,000 basis in the stock. So this $10,000, we look and we say, okay, well, we first looked at current E&P, it's negative, so no dividend there. Accumulated E&P is negative, so no dividend. So there's going to be a zero dividend, right? So what comes next? Well, we reduce the basis in the stock, so the basis in the stock is going to go to zero. So then we'll have a $1,000 return of capital or reduction in basis, right? So no dividend, your basis goes to zero, and then we have $9,000 left. So what's going to be that $9,000? Well, it's going to be treated as a capital gain.